that.
There's no way on God's green earth I'm trading my time for that. There was a time in my life when that probably would have been the right choice. So you're asking the wrong question to the wrong guy. You're asking a great question for
Unless
maybe.
my goal was to get a interesting answer.
Listen, you ask a great question for Jonathan. For me, you'd have to change the digits, and that's because I understand the value of my time. My belief is that most people do not understand the value of their time. Most people feel overworked, underpaid, undervalued, and if they feel undervalued, ultimately means that they don't value themselves.
Kris, I got into an argument recently with a coworker. We were arguing over the value of passive income versus active income. And I said that it was a 1-to-4 ratio.
A 1-to-4?
Yeah.
So what does that mean? It means that
if you earn $50,000 passively, it's worth the same as if you had worked your butt off for $200,000. Now, this individual didn't like my answer, and they felt like $300 of cash flow a month was a really low number. And I said, well, you're looking at it wrong. It's passive. Wonder what your take on it is. And just so you know a little bit of context, that individual is in this room with us right now, behind the camera. Everyone say hi to Jonathan.
Jonathan, of course it's going to be Jonathan.
Yeah.
Okay, so I want to make sure I understand.
And just so you know, this argument happened 5 minutes ago.
Okay, so the argument is...
It's not a real argument. It was more of a discussion, but yes.
Yeah. But it's basically that passive income should be at least a fourth of your active income.
Yeah. I think every passive dollar is worth more than active dollars.
Passive income is worth way more than active dollars.
And I'm wondering what your thoughts on that are. Why?
So I don't value a dollar. Not all dollars are created equal.
Right.
Like a dollar of revenue in a company is like, it's not the same thing as a dollar of tax-free, tax-paid money that I actually get to keep.
How come?
So think of it this way. If I get $1 of passive income from a real estate investment, I know that the depreciation on the property is going to cancel out any taxability on that cash flow. So that is a post-tax dollar to me in my pocket. That is the most valuable dollar, period. If you take an employee, and you'll notice that when you talk to some employees, they say, oh, well, my gross income is $90,000 a year, but post-taxes, it's $72,000 a year. And that's because they're trying to figure out, what am I actually keeping after I've paid all of my contributions to Social Security, and they're thinking of insurance. Man, I'll meet some people, if you talk to a business owner knows that every dollar they get as a distribution from their company, that they have to tax it. And if they make a lot of money, you're just going to assume between state and federal that it's at least-ish a 40% tax. And then if you're a tither like I am, you believe in giving 10% back to charity, that's another 10. So 40 plus 10 is 50%. You're only keeping 50 cents on every dollar you make.
And isn't that after you've paid the sales rep for closing the deal? You paid the marketing team?
Well, now you're talking about revenue, and you're talking about gross revenue versus net revenue. And so, so when someone says, oh yeah, my company, I meet business owners like this, by the way, like, oh yeah, we did 50 million last year. And I'm like, cool. You think that your gross revenue dollar is what's most important. And the truth is, a company that grosses $1 million, that person might make more money than the guys whose business did $50 million. So you have to ask yourself, like when you're trying to compare cojones, what is really important? Is it the largest, biggest number that you can think of? That's like me saying, oh yeah, I've transacted over $1 billion worth of real estate. Now that is a true figure. I've done over 6,000 deals. But I want you to think about that. Does that make me a billionaire? No, a house is, if I transact a $250,000 house, that is $250,000. So if I do 4 of them, I've done $1 million of business. That's different than I made $1 million. And by the way, the only thing anyone should care about if you're doing apples to apples is, what are you keeping? So for me, I've got these really smart people that look at all of my income sources, pop it into this really complex custom calculator. And at the end of the day, they tell me what I actually get to keep. Because by the way, when I open up my online banking app and I look at how much money I have in my different accounts, that doesn't mean that that's the money that I have. Like for example, if I have $2 million sitting in a tax savings account, that is money that is going to the government unless I can find really smart tax strategies to buy crap that gives me benefit that is worth more than just flushing it to the government. And I want to be clear, I don't mind giving the government their taxes, but I've got all of these legal, tax benefiting strategies that I'm allowed to take advantage of. So for example, if I go and buy another private jet, and let's just say section 179 of the IRS tax code allows me with bonus depreciation to write off 100% of that jet in year one. And let's just say for a moment, it's a $5 million jet. And let's say I only need a 20% down payment. I only need $1 million. Well, guess what? I got $2 million sitting in my tax savings account. I take half of it. I put it towards a $5 million jet. Now I get to take the entire $5 million, even though I financed 80% of it, and I get to write it off against my income. Let's just say for a moment that my income was $5 million. Well, I was going to give 2 of that $5 million to the government, 40%, there's the math. But then I bought a $5 million jet, and that basically said, well, actually, Kris, you put $2 million in your tax savings account to give the government, but you took half of it and you put it in a jet, and then you're able to take the whole value of the jet, $5 million, and write it off against your $5 million of income, which brought your income to zero. Guess what that does to the other $1 million I was going to give the government? It's going to put it back in my pocket. I literally just put $1 million in my own pocket, and if I can find a way for the $1 million I put into the jet to be an asset instead of a liability, meaning charter and actually making me money, then that's going to be a plus plus. Plus, I might actually even fly for free, right? There's a lot of examples that you could do with conservation easements on donating land to the government. There's things that you can do with buying commercial real estate for your own business and putting a 10% down, but being able to do aggressive, cost segregation strategy on the whole building and write 35% of it off in the first year, which can offset way more than you actually put out in down payment. Well, now my tax savings account can be used to buy assets. And if those assets make me money instead of producing liabilities, then I'm giving less to the government. I'm buying these assets. So why am I going off on this rant? Because not all dollars are created equal. But if you want to compare all apples to apples at the end of the day, the real question is, what are you keeping? Not how much you're earning. For example, let's take it to a personal level. Someone's listening to this, they're employed by someone else. You might even, let's just say that you're employed by someone else. Let's say that you have a fantastic salary. Let's say you're earning $250,000 a year. But let's just say that your liabilities and your expenses and your lifestyle cost you $260,000 a year. To some people, you have an impressive income of $250,000 a year. And because of the personal choices you've made in debt, and I ask, what did you get to keep at the end of the year? The answer was, I kept a loss of $10,000 because I spent $260,000 of the $250,000 that I brought in. So now this gets us to the definition of freedom. What is freedom? Yeah. It's going to be tied to the money you have left over after you've addressed and have been responsible for all choices that you've made financially in the past. And then the real question is, do you like your life? Because I've got one person that does make $250,000 a year and they only spend $100,000 a year. And after they pay taxes, they get to keep $100,000 and they squirrel it away in a 401k that gives them no personal benefit, no personal cash flow, doesn't give them really almost any tax beneficial status period. They don't have an extra $100,000 in their bank account. They have nothing. And you ask them, are they happy? And they say, well, technically, I only spend $100,000 of the $250,000 I make in a year, but because I have nothing in my bank account, I live in fear and scarcity. They'll never say this to you, but this is the net effect of their choice. So you could have someone that also spends $250,000 of their $250,000 a year, and this person might have the most beautiful lifestyle. They get to invest a ton of time in their kids and family. They get to spend time at the gym. They get to make their body healthy and strong. And you're right. They're spending everything they're making, which is also maybe not financially the wisest, but how happy are you? So here's the 2 questions. How much money are you keeping at the end? And how much do you like your life? Or would you even go so far as to say that you love your life? That is the net at the end of the day. If you comb through all the bull crap that everyone's trying to tell you with impressive numbers and salaries and incomes and revenues, it's like, who cares? Who cares? How much do you love your life and what's left over? What's left over is important. You can either spend it on cool lifestyle choices, or you could do something really smart. You could put it into investments that make your money work for you. So over time, you buy time back. Because essentially one thing that we all want at the end of the day is not the money. We're all doing it. Yeah, to address our bills. Yes, our obligations. But you know what? The reason why we're really doing it, because ultimately money is time. And the question is, what are you doing with your time and how much of it do you have left over? I cannot tell you how many people I meet that make a lot of money and they have very little time. And it doesn't matter what their lifestyle is because they really don't have the time to enjoy it. I got a boat, I got the toys, I got a cabin, I can't use them. Someone else makes far less money, has all of the time, and they're creating such cool memories. So does that answer your question?
Well, you're making me think of the Cheshire Cat in Alice in Wonderland, right? She comes to the fork in the road and she's like, which way should I go? And he's like, or where do you want to go? She's like, I don't know. He's like, well, if you don't know where you want to go, then it doesn't matter which way you go.
Yes.
So knowing what you actually want really does answer the question.
At the end of the day, what else really matters?
So I'm curious for you specifically, personally, Kris, if I told you you could get $300 a month passive, you don't have to do anything, or you can get $1,200, so 4 times, $1,200 a month, but it's going to take 4 to 5 hours a week for you to get that.
There's no way on God's green earth I'm trading my time for that. There was a time in my life when that probably would have been the right choice. So you're asking the wrong question to the wrong guy. You're asking a great question for
Unless
maybe.
my goal was to get a really interesting answer.
Listen, you ask a great question for Jonathan. For me, you'd have to change the digits, and that's because I understand the value of my time. My belief is that most people do not understand the value of their time. Most people feel overworked, underpaid, undervalued, and if they feel undervalued, ultimately means that they don't value themselves. What will they do? What prostitutes do? They'll sell their time for money. And so their time has very little worth to them. I'm in the game of making my time more valuable by how I invest in me and how I personally grow. I believe that growth is God's reason why he has us on his green earth. I believe it's a big reason to why we're here. And so resource is about being reallocated in a way that grows who we are as human beings.
So Kris, what's your standard for your time? What does it have to be to meet?
It has to be recalculated often. Most people should recalculate once a year. If you are doubling or tripling your income every year, you have to recalculate probably quarterly. For me, I have to look at the value of my time probably every 30 to 60 days because it's constantly increasing. And the reason why it constantly increases is because I constantly set my bar higher. For example, once upon a time in the very beginning when I started mentoring human beings, after I had spent my money on being mentored, there was a day when I started mentoring someone else. I'll never forget, Tracy Roberts was my very, very first student. And he met me at a seminar, was blown away with everything I presented. I was sitting down with he and his wife, Lviv, in a one-on-one game plan. And rather than just the ordinary program, I felt inspired to say, and it was really weird, the intuition spoke so loudly, and I said, I feel called to charge you a fee to give you 6 months of intense mentorship. And they said, well, what's the fee? I said, $20,000. And they looked at that and they're like, yes. Like to them, it was a bargain. And to me, I was going to build confidence in doing something I'd never done before. I produced so much value for them over that entire mentorship period of time. And over the years, 20,000 turned into 40,000, turned into 100,000, turned into $250,000.
I was going to say, Kris, if you offered 6 months of one-on-one mentorship today for $20,000, do you know how many people would be lining up?
Well, at times, by the way, it's a function of demand and supply. It's a function of how many people have that kind of money available and also if people value that mentorship. Most people, unfortunately, don't value mentorship. It's why they'll never grow into their potential. Here I am last week in the Galapagos. I'm on a private yacht, 143-foot, beautiful yacht, outfitted with a private crew, private chef, and I've got my own naturalist for a week. And he's taking us around to the different islands, and every day is filled with snorkel adventures to see all these endemic creatures based on Charles Darwin's theory on natural selection, educating my children in what my wife and I call world school. The head of our children's education is Dana Sanders. So she was there. That meant that my wife and I had time for us, some dates, some private time. And Ms. Dana's taking our kids, and we've created the environment for them to receive this schooling experience. And I leaned over at the end of the trip and I said, you've been with us now for 2 years. You're about to start your 3rd year. I have a question for you. I said, you spent over 2 decades in a traditional schooling system where you would have to cater to 30 children in a room at a time. Curious. Now that you're spending time with just 3 of my 4 children, and it's just you plus supplemental educators, more or less one-on-one, what value of education do you think my kids are getting compared to what it was like on what you were giving in a school system? And she looked at me, she said, Kris, I can't, it's not even black and white. She said, it is indescribable spending 2 decades inside that system. She said, I always had to pander to the weakest child in that school system. I tried my hardest to give everyone as much attention as I could. And the reality is they got such little attention from me. But she said, your children are all receiving a highly customized education. And in my mind, I didn't ask her this question, but I was thinking, wow, I wonder how many years or quality of education each year to my kids is worth in this education system that my wife and I started 3 years ago with them. Well, I was attempting to quantify value, and I wanted to understand the value of the education I was giving my children. And I turned to her and I said, I want to put you on my YouTube channel sometime, and I want to bring you in, and I want you to just share with me on this YouTube channel 3, 4, or 5 biggest differences that you can give someone in a one-on-one education versus a group education. And she said she'd be happy to do it. And I said, great, because from there I'm going to pivot and talk to the adults. And I'm going to tell them that there's no greater education on the planet than a one-on-one education with someone that already has or possesses the knowledge, skills, or abilities that you seek. Nothing is comparable than that. Why would someone spend $250,000 on a college education when all of that information is available online? There's no real world application. Most of the time, the professors have no real world education. They're professional academics. They live in academia. Their knowledge is important, but we're past the information age. Why would someone pay for all of that education when we can self-educate, when we can access all the education that we need? For the most part, not obviously not for lawyers and doctors and engineering and a number of really important specialized skills and abilities, but for the vast majority of us, education is backwards, and so is the value of our time. A person should know the value of their time, and they should have a strategy to increase the value of their time. You can't increase what you don't measure. You must measure to get data to know what you need to increase. You might live a very simple life. I make $50,000 a year. Great, your time might be worth $25 an hour. I don't know, I'm making it up. Now you know that, and you're like, well, next year if I work hard, I might get a raise. If I get a 6%, cost of living, adjustment. Now all of a sudden I'm going to be making, $26.50 an hour. Like, cool. So if your income or the value of your time only increases single digits every year, where do you think you will be as a human being financially 20, 30, 40 years from now? The answer, disappointed, lacking resource, and not enough. I talk so often about making your money work for you, but you have to start by making your time work for you. And you can't make your time more valuable unless you know what its value is, and then there's got to be an initiative to double the value of it every year. And you're going to say, Kris, but I can't do that inside my job. And then I would say, now we go back to Jonathan's debate with you. Take the little extra money, invest it in something, and create a passive income. That passive income can increase the value of your time without requiring more of it. You now become more valuable. And we should all be thinking that way. Passive income is one way. Developing a new skill is another way. Getting a promotion or a different or a better job is another way. Having goals and intentions set upon knowing where you're at versus where you want to be to start manifesting and looking for the opportunities by first believing it's even out there is another way. There are so many different ways, and people should spend more time being obsessed with their strategy on how they're going to increase the value of their time. Because if they do, they'll make more money. If they have more money, they can have more money working for them. If they have more money working for them, they'll have more options. If they have more options, they can work where they choose, or someday don't have to work at all. And eventually their entire lifestyle is covered, and then they have the one thing that we really want, which is freedom, which is always a combination of time and money. You need the money, you need the time, then you're free.
Well, Kris, in true form, even after 8 years of listening to you talk and mentor and train, I'm still over here taking notes. And I just want to take the opportunity to say, Jonathan, I'm sorry it was a pointless debate, because my question to you should have been, well, what do you want? Because it changes everything.
What do you want?